Hi, everyone. Welcome to the Seattle Angel Workshop series. We run a series of workshops on a regular basis, like every week, talking about startups and the early pre-seed startup ecosystem in the Northwest. This is all leading up to the Seattle Angel Conference, number 29, that's coming up in March. And every time we run a cycle, we try to do a Meet the Funders. So today, we're going to go through our Meet the Funders program, where we talk about the different early pre-seed and seed funders that are in our ecosystem. And since we have a number of people, what I would like to have you do is to post into the chat what brings you out today so that the speakers can sort of address wherever you're coming from in terms of the work that you're doing. So we have a number of people who are um, uh, representing one kind of angel fund or micro VC fund that's in the Seattle area. And so to start that off, I would like to invite Elaine, who is our regular data geek at Seattle Angel Conference, to talk about her data collection efforts around the local ecosystem. Let me spotlight you, Elaine. There you go.
Great. And then let's make sure I can share my screen. Tell me if you guys see that.
Looks good.
Okay, awesome. So team, I'm very excited to be with you today. Um, but what I'm sharing with you today couldn't be possible without the fantastic cooperation from all of the funders that you will see today, as well as funders who couldn't be here in the Northwest, so that we can get a very good picture of what our ecosystem looks like. And founders can understand a little bit better the lay of the land and who is active out there, how are they active, what size checks are they writing, and how that might be able to help them on their funding journey. So, what I want to do is share, if you guys can all see this. This is the list of the 16 funders in the Pacific Northwest that has shared data with us for 2025. A big shout out to everybody on this list. Super helpful to be able to put that kind of roadmap together. So what you will see in the subsequent three bubble chart slides will be a growing progression in terms of the average investment size. And so this list of funders is set up in that way. And what you will find if you haven't found already that the funder and founder match super, super important. So, for all of the founders out there, it's really important to understand what the different groups are looking for, which they will talk about tonight, which is awesome. What kind of organization they are, like what type and what stage and focus. So the great thing is that everybody here today has early startup focus to be able to get those startups kind of up and off the ground. So, within our list of sharing, you will see Venture Black, Flywheel Conference, Seattle Angel Conference, Transatlantic Conference, Swan, First Row Partners, Startup Haven, Graham and Walker, Venture Us, Alliance of Angels, E8, Keiretsu Forum Northwest, Ascend, AI2, Pioneer Square Labs, and Madrona, and how those fit together and create our ecosystem is a beautiful puzzle to see. What you also see is that the type of organization they are changes. So in our area, we have everything from angel networks to angel event funds, micro VCs, venture builders, and VCs themselves. So when we look at that and we start out, this is the first view And there will be three subsequent views that build on each other. So let me kind of just give you a feel for this. On this y-axis are the number of deals. So the number of checks written in 2025. On along this x-axis is the average check size that the different organizations wrote in 2025. And then the size of the bubble is that total amount of funding that they shared with the ecosystem in 2025. So what we see here is there is a definite difference between the number of deals happening. So in this lower left area, we'll see check sizes from 200K and under, and 5 deals or less. And that includes Venture Black, First Row Partners, Flywheel, Seattle Angel Conference, and TAC. And then if we move to the right, we see the check sizes get larger. And we have Graham and Walker, Venture Us, and Startup Haven, which are now different kinds of organizations. But we're still in that area where their check size is under 10. And then in the center stage here, at 200K or less, we have two larger bubbles up here in terms of a larger number of deals that are happening, and that is E8 and AOA. So when you hear from them today, remember kind of this visual that will kind of help you understand where they are in this average deal investment of under 350K and how that looks. If we look at what's that next increment in check size, if we go up to 750K in check size, you see that we now add 3 additional players. These funders are Ascend, AI2, and Keiretsu Forum Northwest. And all of the funders that we had on the previous slide kind of slide down here, as what is changing here is the x-axis. So the size of the checks, now there's a wider range here on our x-axis, and the number of deals is also changed, and the number of deals is higher. So what you will see is Keiretsu will have by far the largest number of deals up here in way over 130. And last but certainly not least, let's extend that check size to under 10 million. So we really, really move that x-axis out. And all of those organizations that we were looking at on the previous 2 slides are now down here on the left-hand side. And we have the introduction of Pioneer Square Labs at an average check size of around $1 million, a little bit above that, with 20 deals per year. And then we have Madrona, and Madrona has 2 funds. They have their core fund and they have an accelerator fund. The core fund focuses on pre-seed, seed, and Series A. The accelerator fund focuses on B and C. So what you can see here is that within our own area that we have funders active and interested in funding everything from pre-seed to Series C. So it's awesome that we have such a robust funding ecosystem. And again, want to thank all of the groups here today and those that couldn't be with us for sharing that data together so we can understand how the picture all comes together.
Great. Thank you so very much.
You bet. Turn it back over to you, John.
Thanks. And we have been keeping data like this for a while, Elaine. Is there any information you have about how things have shifted in the last little bit that you would want to call out before we dive into things?
I would say what we're seeing, which is a very positive sign, is more funders. And so maybe that's one of the things that the funders today can talk about in terms of what they're looking for and how they differ from the others here. So, because you could see on that last slide, things were getting a little crowded. So it's great to have all the options, but certain, as we kind of said, certain funders have a focus. So it's awesome to understand what everybody's focus is so that nobody's wasting time on either side.
Great. Thank you so very much, Elaine.
You bet.
So let me spotlight me and then let me spotlight, um, my- let me bring you up, Eric. You were number one on my list. Um, so Eric is from Alliance of Angels. Would you like to start the conversation about your specific group, and we'll bebop through all of the groups at this point.
Sure. So the Alliance of Angels were a group, and Brent Weeks is here as well. I don't see him on the screen right now, but I know he's here. I don't know if you want to. Oh, there he is. If you could unmute Brent maybe as well, he might have some comments. But we're a 180 member group. We invest about 4 to 6 million a year in around 20 deals. We have a fund as well. We raise an annual fund of about 2 million a year, and then we deploy that each year into about 15 companies. And that fund stimulates members to write checks. We started out as a solely as people writing individual checks, but we started the fund about 5 years ago, I think, and we'll invest in any U.S. company, any C Corp. It's got to be a U.S. C Corp or a Canadian equivalent. This kind of shows some of the breakdown. We're pretty fund agnostic or pretty industry agnostic. We listed out some of the companies we've invested in somewhat recently. Semi was an exit this last year. Um, we got about a 4.3 times return after only 2 years on that one. It was kind of an early exit, but that should be 70%, not 70p. But 70% of our companies are based in the Pacific Northwest. We do invest in deals from other angel groups that we syndicate with. We're looking at one company right now from Queen City Angels out of Ohio. But we think our fund's really good because we're good for our members because for a 25K investment, you can get a diversified portfolio of 14 to 16 companies per year. It's very low cost. We only charge about 0.5% per year, which is basically just the fees. It's run, Brent is one of the admins as well as I am, but it's managed by members really as a service to the other members. All the investment decisions are done by the members. Members source the deals. If two members put a deal forward and do the due diligence, write up a diligence report, we then have a vote among the members. Maybe keep going to the next slide. Yeah, we got some great sponsors at AOA. K&L Gates has been a founding sponsor for us and been with us since the beginning. Escalon, BDO, Brex, Trinet are all really strong sponsors for us as well. And then that's probably about it. But Brent, do you want to add anything to what I've shared?
Just, we are, the oldest angel group that's still, consistently going after we merged in with Gary's Puget Sound Venture Club. And we've got connections with most of the other groups here. Some of us are even members in some of the other groups. So we just, the ecosystem around the Seattle area is almost more of a family than it is just business. And, we've participated in John's SAC ventures. I was part of SAC 28. I think, I don't know, Eric was talking about being in SAC 29. I don't know if he's
I
decided on
am.
that yet. Yeah.
If
And
John didn't reject my application.
yeah, yeah.
Yeah, already in.
So, yep. So, yep, that's the Alliance of Angels. We are a nonprofit organization. So, all the member fees go toward, operating the organization for the benefit of the members.
Yeah, and
Okay.
maybe two other things is we don't charge companies that apply to us. It's free to pitch the AOA. And we also merged with Wings, which was a med tech angel group here in town a few years back. And today, about 40% of the deals we invest in are life science, about 40% are like software or deep tech, and about 15% are consumer products. And then 5% are miscellaneous other.
Right. Speaking of which, one of our consumer products is on the line with us here with New Deal. We have an investment in them. And so, yeah, we get around.
Cool. Well, thank you both. I'm going to move on to E8, Amanda and Sarah.
Right, thank you, John. I'm just going to share my screen real quick.
Yep.
All right, excited to be here. And my name's Amanda. I'm the marketing and membership coordinator at E8, and I'm joined by Sarah Bell, who is our pipeline and portfolio lead. And I'll just give a quick rundown on who E8 is. So we're a nonprofit investing community focused exclusively on clean tech, with the mission to accelerate the transition to a cleaner and greener future. We were founded in 2006 in Seattle, so it's our 20-year anniversary this year. We have about over 130 member investors, and we've invested in about 180 portfolio companies. And over our lifetime, our members have deployed about 75 million. Our community, we have a diverse membership, about 130 members, as I mentioned. We were founded in Seattle, so about 60% of our members are here. Our membership includes new and experienced investors from all different sectors, but we're aligned around a common mission of deploying capital into the climate space. We have active engagement. We host monthly member meetings with live company pitches from returning portfolio companies as well as new companies. We host our annual meeting in Seattle, and we also run networking events and site visits at conferences such as Climate Weeks across the country. Beyond just writing checks, we also provide our members with education and support, such as our learning labs on innovation and investor education. We have our University Fellows program, which is to help with our technical due diligence, as well as peer-to-peer learning, given the diverse background of our membership. And we have a very collaborative culture. I'd say it's really welcoming and supportive, especially for people who are new to angel investing or haven't written their first check yet. In terms of our investments, we invest solely in companies based in the US and Canada. And I would say seed is our sweet spot, but we invest from pre-seed to Series A across clean tech. And we look at clean tech pretty broadly, anything that has a positive impact on the environment. Here are some example sectors such as renewable energy, ag, built environment, transportation, climate resilience, etc. And we have 3 different funding pathways for our members, depending on how they'd like to engage and deploy their capital. We have our core investing model, just the classic direct investing for our members. And our investing season runs from September to May. And then we also have an annual fund. This is the second year of our fund. It's open only to E8 members, but it's optional for E8 members to join. It's a member voting model. 25K minimum check helps you diversify your portfolio across. We saw 15 companies invested in this last year. And so our fund is wrapping up expressions of interest next month. And then lastly, we have our Decarbonate Fund, which is our philanthropic impact fund, which allows anyone to invest using their philanthropic dollars. And that runs every summer with a different theme. And we'll be announcing our theme shortly for this year. And it runs in the summer months from May to September when we're off that regular investing season. And so just a snapshot of our 2025 stats, our members invested 5.5 million across 36 companies, which included 16 new companies in 2025 and then 20 returning portfolio companies. And you can see the breakdown by our 3 investing models. And if you saw on the graph, E8 was kind of way up there in the top right. And so it's great to see our members. We're deploying a lot more capital into companies coming back to us, and it's a great opportunity for new members to also get a piece of companies that are doing well coming back to E8. And so to get involved, you can reach out to me directly or our general email director at E8 Angels to learn more about membership. We always appreciate referrals to great climate companies. And if you're interested in seeing what life is like at E8, you're welcome to attend one of our member meetings as a guest. Our next one is next Thursday from 11:30 to 2 p.m. So feel free to reach out to me to get connected. And that is all I have.
Cool. Thank you so very much. I'm going to move on to Dan Delmar. Dan.
Good evening, everybody. It's great to be here.
Hold on a
I'm the
second.
founder of Virtual Angels Network, and we are, in some ways, a little similar to the previous two, but in many ways, quite different. We were started 5 years ago as in kind of the middle of the pandemic as a virtual angels network, and we remain completely virtual. We have no in-person meetings, social or otherwise. We are, because of our virtual nature, we're able to look at deals easily all over the country, and we do. We have companies that apply from many different cities, and the way that we get them, this is really our key strength. Our sourcing and screening model is to attend a large number of virtual events by other groups all over the country. They've already picked the best from their deal flow, and we identify the best that we see pitching on all these different events. And we invite them to apply to Virtual Angels Network, and then we screen them. And it's a very competitive process. So we don't have a standing screening committee. Rather, we pick a member or two who has some industry usually or some other knowledge about the startup, and we ask them to rate and review the company and the applicant company, and then we pick the very best of all of those. And we have pitch events just 4 times a year, each quarter, as it happens. Our next pitch event is tomorrow, but it's only open to any accredited investor anywhere. And the 4 companies that we picked as the best this quarter, which we invited 4 weeks ago, 3 or 4 weeks ago, so we have them all lined up. So we're interested in all different sectors. I would say our sweet spot is seed round. We find, and this is based on what our member, they kind of vote with their feet or they vote with their dollars, because we're a network. We have no fund to go with it, or only a fund. We are a network. So at the end of due diligence, which we also do as a team, we leave it to each individual member to make their own decision whether to invest or not. And we found that our members find pre-seed deals a little too early. We're really looking for some proven product market fit. So some actual customers, paying customers, not for the financial impact because it's too small at the early stages, but rather for proof of product market fit. And then our members invest directly with the companies. We have had, we're still a small group. As I think I mentioned, we started 5 years ago, but we feel that we have a real personal touch in both the using the expertise and interest of our members at each stage of the, let's say, the funnel, and also in just the way we deal with each other. We're very much into teamwork, even though at the end of the day we make individual choices. We're interested in. I should say, when I talked about the sweet spot being in seed round, we also do Series A rounds, but not the larger ones. Where we kind of limit it to companies that are raising at most $6 million, because we find after that it's really for the institutional investors primarily to drive it, and we just don't have any influence at all. I think I've probably covered all of the major dimensions, unless there's something, John, you think that
No, I
us
think,
that we should
you did a
add.
good job. Um, I'll move on to Jonathan. We're going to do breakout rooms afterwards.
Glad to be here, John. Thanks.
Thanks.
Hey, my name's Jonathan Cagle, and I am a Seattle Angel Conference alum. I started with Seattle Angel Conference number 3, believe it or not. Stayed in there for a number of years and really, got my introduction to angel investing thanks to people like John Seacrest. And I loved it so much that I continued for a while and then moved on when Seattle Angel spawned off something called the Seattle Angel Fund, who brought on Susan Preston, who's here on the slide, to run something that's a little bit like Seattle Angel Conference, but sort of moved on with continuing deal flow, a little bit further along in the company stage, usually going seed and maybe even Series A, and just sort of taking things a little bit to that next level with still the focus on education. That Seattle Angel Fund became Sea Change, and now we're sort of bringing a lot of that back with Venture Us. We started it because we love investing in the Pacific Northwest. We love working and collaborating together to make the best investments. At the top of the screen, you can see the 4 leaders of Venture Us: Jenra Henry, me, Keith Lepley, who started in SAC 2, was the assistant manager for Fund 5, which recently had a great success in Discuss.io. We just got some checks from John. Thank you very much for getting that. That was quite profitable. He was also the fund manager for Fund 6, which was ESS, which was an IPO and also a fantastic exit. So, in addition, as I mentioned before, Susan Preston, who was brought on by John and others to lead this and is now a venture partner with us at Venture Us, helping maintain the really amazing quality she has for education, legal background, and just experience. Some of her students at UW called her the OG of VC, having great connections, having worked at Element 8, and a number of other local and California angel funds like CalCEF and others. We invest in pre-seed and seed funding exclusively in the Pacific Northwest. If you're coming up from California, there's some pretty good funding there in California. We prefer to have a focus here in the Pacific Northwest where there's great examples of companies everywhere in Portland, Vancouver, Seattle, Eastern Washington, et cetera, that we feel that there's a great variety and diversity of companies, and we can have more impact by investing directly. And we have the opportunity to meet with the founders. We're not entirely virtual. We learned in COVID that there's a lot of value in meeting via Zoom. We have members all over the country, but we also meet in person every month on Mercer Island because there's a certain level of excitement, electricity, interaction that sometimes just doesn't happen online. So we think we bring the best of all worlds for people who are investing both who live locally and all over the country. Our checks are 150 to 400K. We have a group fund and also spin up sidecar SPVs for people who want to double down. We invest in between 6 and 10 companies a year. And we believe that by working together, we make better investments. And we also want to bring investors up through education, mentoring, shadowing, and other programs. We think that a big part of our value is the support we provide to founders before, during, and after the investment. Even the companies we don't invest in, we spend time on giving them good feedback, perhaps forwarding them to other groups. We participate in a deal sharing network with a number of the other groups here. And we think that helps the whole community. And oftentimes we'll see companies that come back stronger after our feedback. We also, as was mentioned before by AOA, we don't require our founders to pay us any fees to present. There's no cost to present, and to send our companies our way. And we encourage people who are founders to take a look at our website, where we have lots of information about how we work. Our fund two is investing now, and we are still open to new investors. And if anyone's interested, I'd encourage you to come to the breakout session where I will be talking with people. I think Keith will be able to join us as well. And thanks, John and Elaine and others, for making this opportunity available for me and for creating this great group of investors who will be making a difference and hopefully making a lot of money too. Thanks.
Cool. Thanks, Jonathan. Here's Nate from Ascend Ventures.
Yeah.
Hello. Let me grab my screen real quick. Can we all see this?
Yep, looks good.
Yeah, I'm Nate. I'm a senior associate at Ascend. I've been at Ascend now for about 2 years. Unlike AOA, we are fully for profit. We work hard to ensure our shareholders and our LPs make money. And the way we do that is we're pretty bullish on the Pacific Northwest. If you follow us on LinkedIn or anything, you'll notice that we talk a lot about Seattle. That's not to say we won't invest elsewhere, but we think kind of like all the other investors, there's a ton of talent here and not a ton of capital chasing that. And we like to say to our LPs that 1 in 4 of the AI engineers building out what we see as AI today, both beyond the cloud and with new models, lives in Seattle. And I guess Bellevue now is kind of the new battleground for all the HQ2s for offices. So when those engineers and types leave those companies, we try to catch them before they move to the Bay Area. The fund was founded in 2019 by Kirby Winfield. He's pretty loud online if you guys are on Twitter or LinkedIn. But he's been in the Seattle area for a long time. He was on the founding team of a company called GoToNet, other one called Marchex. Both went public, and was CEO for 2 others that he sold early on, and was part of helped start the Allen Institute for Artificial Intelligence, the incubator program with Paul Allen and Ora Netzioni back in 2017. Was an angel investor and converted into being a fund manager in 2019, where I got to join about 2 years ago. We also have a team. Jen Holler, she's their chief of staff and also a partner. She's been in the Seattle ecosystem for a long time, working with startups, things like Axon, helping build out the Seattle office there, and now a public company. We also have Thomas DeHura, who's a software engineer by training, went to Purdue, and does a lot of our analyst work, builds tools for us. And we have a great on-staff CFO. Myself, I was a reporter before this. I worked at GeekWire covering startups and venture capital. So I work with a lot of our companies on getting cool TechCrunch or GeekWire or any articles like that, and also their pitch and narrative. But we try to be the hardest working investor on the cap table. We often co-invest with really big tier 1 type firms, and we are not huge yet, but we try to be the investor you call when you have an Ode Kolsa on your cap table and you don't want him to scream at you. We try to be there first and work out those things, and to ensure that we can help and work together for the long run. I should say we're truly pre-seed. We invest on day zero. We often back founders before they even leave the companies that they're at, or before they have any revenue traction. And the focus areas that we like to invest in are what we call, we kind of break it down into three buckets. The first is AI infrastructure. It's the thing that's, we're still investing in foundation models. We call those fast followers. Anything like a Moondream, a tiny vision language model, to this company called Umi that's building a foundation model for the enterprise, to like evaluation software, things like GPU software and productivity tools on the developer side. We also do what we call SaaS 3.0, basically AI native vertical software. Popular company in Seattle right now is Udly. They just raised their Series B. We've been in it since the beginning, and there's some others there. And then the final bucket is what we call frontier AI. Those are the fun ones that are really fun to talk about. One of the ones that you guys may have heard of is called Overland AI. We backed them at the pre-seed, set up the terms there, and have been investing since the Series A, or all the way up to the Series A. They're doing off-road autonomy, basically Waymo for self-driving tanks. But the way we define frontier is AI that interacts with the physical world, and often hardware related. Our check size is 750K on average out of our fund three. We're made about 12 deployments out of our fund three so far, average about one investment a month. And our target entry is about 5 to 8%, though we're pretty flexible on that, and there's no real hard and fast rules. We've backed, we like to, Kirby likes to say my GP likes to say it's a Spotify playlist. So we'll back anyone from like a professor coming out, like Byron Boots, to first-time founders that are still pretty young, college dropouts, to people that have been working in big tech for a long time. So we try not to fixate too much on a certain prototype of founder. We think there's opportunity in all different types, and by and large, those founders are technical, and have some kind of technical brilliance to them, and we really love to back them. Like I said, we often co-invest with big name founders in the Bay Area. We like to get to them first in Seattle, but usually the best companies get funded by really big tier one VCs. And so we like to co-invest with the folks on the screen here, and there's a lot more. And so we like to, bridge kind of the funding gap with Seattle to the Bay Area and New York. We're also pretty loud externally. We do this big thing in September called Founders Bash, where we try to bring 1,200 founders to Block 41 and have a big party. It's sponsored by AWS and Stifel. We do a lot of dinners and panels, and we have our pitch and run during Seattle Tech Week, which you guys should all come to. We run around Green Lake during the beautiful Seattle summer. And yeah, would love to hear from founders, VCs, anyone, if you want to talk more about the fund or pitch us. Our website just ascend.vc, and yeah, follow me on LinkedIn and Twitter. Thanks, guys.
Cool. Thanks so very much. Nathan, I'm bringing you up next. And sadly, there we go. And I see it's
All right.
saying that you're sharing your screen, but it's not pop. There it is. All right, there you go.
All right. Thank you, everybody. Appreciate the opportunity to catch up and hear all the great funding groups here in the Northwest. It's been a long road here the last 25 years, and we're pleased to be celebrating our 20th anniversary for Keiretsu Forum Northwest and Rockies, getting started in 2005. And we've recently launched this last year, our ecosystem venture group. We've acquired People Connect, Pitchforce, and rebranded our investment syndication network, as well as launched our new fund. So I'll try and highlight some of the updates we've made as an organization and how we're serving our entrepreneur and investor communities, and really trying to create capacity to be able to support funding for all of our great portfolio companies. It starts with our core values. Acronym is great: growth, resilience, excellence, authenticity, transparency. That's how we evaluate our founders, our investors, our team members, and the partners that we get a chance to work with within our organization, as we aspire to be able to provide as much support as we can for our portfolio companies and build great cap tables and portfolios. Quick informational overview on Keiretsu Forum Northwest and Rockies. We are an affiliate of the Keiretsu Forum Global Angel Investment Network, and have been one of the most active angel investment communities over the past 20 years. Several thousand investors, of which we have about 700 plus here in the Northwest and the Rockies region. We bring deal flow in locally, screen through about 150 companies a month through our community review, our deal screening process. ultimately put together a roadshow that's in person and hybrid, complete due diligence on 63 companies. We completed due diligence on last year, about 380 folks that were on our due diligence teams. And then we syndicated those deals across our network, both within Keiretsu as well as our investment screening committee. Our claim to fame really is the due diligence. We put in about 100 hours of due diligence on every company that we work through our process, and to get the companies in front of several hundred investors through the Northwest and the Rockies, and then ultimately be able to syndicate. So we're generally focused on go-to-market opportunities, companies raising $500,000 to $3 million. And our members join because they get access to great quality deal flow from throughout the United States and around the world. Get a chance to collaborate, work together, and bring in the next gen. For 2024, we had about 76 million invested in close to 130 companies, about 209 events. For 2025, we're up to 85 million deployed across 243 companies, an average of close to about the same, around 600 grand. We're up to 779 active investors, part of our network. And we did 205 events in 2025, 129 virtual, 76 that were in-person roadshows. So we do welcome folks to join and participate, be a part of our investment community. It's been great to see everybody bounce back out of COVID and get back to our in-person meetings, plus our hybrid. We do 3 expos a year. These are our big events with 300 to 400 in-person attendees, typically 18 presenting companies, our family office forum. Next one's coming up on April 1st and 2nd. So we are actively looking for deal flow for that big event. And then coming up in Denver in June and in Seattle in August again. So we do our events every week, every month. So check out our event calendar for all the upcoming Keiretsu Forum meetings. We also acquired Pitchforce this last year, which has a 15-year track record of helping entrepreneurs a little bit earlier stage, companies helping to perfect their pitch. And so that's a panel of investors providing live feedback to entrepreneurs that are practicing their pitch presentations and then giving out awards. So encourage entrepreneurs that are a little earlier on in your journey to check out Pitchforce. The programs are free to attend. And we'll be launching a entrepreneur subscription program here over the next month and building out our entrepreneur support program under Ecosystem Venture Group. Be a tech week every week eventually as we get towards the end of the year. So tremendous resources and support, leveraging our 25 years of experience, and very much appreciate all of our groups that are part of our investment syndication network, now up to over 100 different funding organizations that we syndicate deal flow with across the United States and Canada, many of which the groups sit here in the Great Northwest. We also rolled out our Northwest Angel Fund. In the process of launching our Southwest Angel Fund and our Rockies Angel Fund this year as well. Many folks want to be involved and invest in a passive, more limited partner proposition. And so we want to make sure we have an opportunity for folks to participate there as well. We just committed on our 24th investment today, and our goal here is to make it a little simpler for folks to get involved in angel investing 25, 50K on up a year, and be able to access great deal flow, co-invest, support, be involved in growing in our entrepreneur and investor ecosystem and building our relationships, being able to lead funding rounds, negotiate deals, and put together deal terms. So it builds off our global network we've built up here the last 25 years, looking at thousands of different opportunities and screening through those to the opportunities that we think are the best for early stage, growth stage, and late stage opportunities. These are just some example of some of the companies that we have in the current fund, which we did just extend, and we're open to the end of June for folks who may want to come in. We are actively looking to bring in another 10 or 15 investors into the current fund. So appreciate everybody's support and involvement in the different groups. Please do join us in the breakout room to learn more about any of our different program of services. And thanks, John and Elaine, for putting things on.
Cool. Thank you so much, Nathan. Can you say the dates again of the expo so people have that in their head?
Yep. InvestorCapitalExpo.com is the website, and April 1st and 2nd is the next one coming up. And then again in June in Denver, and then in August in back here in Seattle again.
All right, wonderful. I'm going to bring Chris up next. Chris is our SPV organizer for SAC 29, and will tell us a little bit about SAC and the transatlantic version of SAC.
Hi guys, welcome. Thanks for everybody for joining. I think there's a lot of cool angel groups presenting today, um, and I think what SAC. I'm going to talk about a little bit about Seattle Angel Conference and Transatlantic Angel Conference, the sister organization that John has in based in Europe. I've done both of those, and I've loved every minute of doing them, and I've been doing this for the last couple of years. Um, the focus of SAC and of TAG are probably more on the earlier side of the angel investing journey. It's probably more focused more on people new to angel investing, interested in angel investing, have done a couple deals or a handful of deals, and seeing if they want to continue to pursue it even more, or learn a little bit more about doing this stuff. So, I mean, we're more of an education program and more of a learn as you do program, unlike some of the other angel groups. Our goal, hopefully, is actually you graduate from this and then join a lot of these other and look and be interested in joining some of these other angel groups. But our focus is really, actually doing, like it's like taking an evening MBA program. It's a 3-month program. Everything is sort of fully engaged in those 3 months. And the investors, um, typically we have between 30 and 40 investors in each cohort. We do two programs a year, a spring one that's starting on March 3rd, and a fall program. Um, and the focus is really sort of engagement during those 3 months, where the investors are basically doing everything, touching every point that an angel fund would do, but the investors are actually doing this. So we first start out looking at 60 to 80 startup companies. So really, we as a group are doing the screening. We're going through those screening and voting which startups we're watching the pitches, we're asking questions, we're discussing amongst ourselves, and then we determine which of those startups actually go to each next round and finally go to a finalist, become our 6 finalists. At that point, we form into due diligence teams. So all of our investors are involved in actually doing due diligence and writing a due diligence report. And in the end, there's a final pitch off from the startups and final discussions amongst the investors and the vote for which startup actually wins our collective money. So typically, 30 to 40 investors, that's 150 to $200,000 will go to the winning startup. So, this is a concentrated program where it's not like you're seeing different startups and and not fully engaged. This is you're fully engaged for those 3 months and trying to learn all of the different aspects of angel investing. This is great for early investors who are trying to figure out what their investment theses are, what they're kind of looking for, what they're looking at. We're a mix of alumni and of new investors. So one of the really good things is that this helps you get into the startup community, the angel investing community, meeting other investors and seeing how they think about looking at these startups and looking about angel investing. Um, and so, like one of the so that's kind of our program. And one of the biggest assets of our program is that, we're doing our 29th one, but one of the biggest assets is John Seacrest. And that's why I come back here too. Like he knows so much about angel investing. He's been involved in a lot of these other angel groups. I really enjoyed his mission of really just trying to grow the startup and the angel investing ecosystem. And just to throw out a couple, factoids. Um, through John's SAC and TAC programs, Mossy Ventures, we've made over $6.3 million of direct investments. We've, looked at and been involved with over 2,700 startups have come through our program. There's over 1,000 alumni who have, done and continue to participate within the whole SAC and TAC programs. So, I really enjoyed that, like that John's mission of growing this ecosystem, and he's really brought a lot to the Northwest and Angel community. Um, but if anybody's interested in that, especially if you're new, and with founders, um, this is a great program to kind of look into and find out a little bit more information. If you're not really quite ready to jump into a full-fledged angel fund or angel group, this is really targeted more for those early new angel investors. However, as I saw Elaine um, do her little comment, we have investors like Elaine who basically have done every single SAC from SAC 1 to SAC 29. So you're going to get a lot of people who are, um, you know, experienced to new in this program.
Can you talk a little bit about the difference between SAC and TAC?
Okay, yeah. So SAC is Seattle Angel Conference, and TAC is Transatlantic Angel Conference. So SAC, most of the investors are US based. The majority are Pacific Northwest. I'm personally actually living down here in Southern California in Los Angeles. We do a virtual program, so everything's over Zoom. Uh, we do our program is Tuesday evenings at 6 o'clock, is our regular weekly meeting for the 3-month program. TAC is based out in Europe. Most of the investors are European based. The startups tend to be European or US based, probably an even mix between them. Whereas the SAC company startups are primarily US and Canadian based companies. TAC is, if you're more of a morning person in the US, it could work with that. Their program is Thursday mornings US, Thursday evenings in Europe. But that also, again, follows the same sort of program. It's a weekly virtual program on Thursday nights.
And you did both.
And I did both. I started out doing TAC 5, and then I've done the last 3 or 4 SACs here. And part of the goal is also like the more you get involved, you can continue as an investor, or you can graduate up to starting to help with organizing the next programs. We're all volunteers in SAC and TAC. And, as you do more of the organizing, you're going to be learning more of the aspects of angel investing. So as an organizer, we're helping to bring in other investors. And when we finish voting on when the cohort votes on the final winner, me and my co-organizer, David, will be negotiating the final terms with the winning company, organizing the SVB, putting together the operating agreements, and getting all of that back end work done. So those are some additional things that are additional learnings outside of the regular cohort that
Well,
this program brings.
excellent. Thank you. Let me appreciate thank everybody for doing that. I'll come up now. I think I've gotten everybody on my list. If I missed somebody, please say something now. Um, we are going to do breakout rooms, but before we do breakout rooms, I just wanted to check to see whether or not there were any group conversations that are questions that people wanted to ask the whole group. Anything that people want to bring up for everybody?
John Priscilla asked something
Yes,
in the
go ahead.
chat.
Priscilla, you want to address that? I don't see Priscilla. Oh, there you are. Okay, I think I can't see her, so let me open up the breakout rooms, and you can move to the breakout rooms and chat with people as you like.